Hello, friends. Welcome to Nirmal Bang. I am Piyush Jain, and today we are going to be introducing to you a new company which is very soon going to get listed on the bourses. There's an IPO coming up. The name of the company is Suraj Estate Developers Limited, a very well known brand in the real estate industry in Mumbai, especially. They have actually built more than 40 projects, especially in that market. And you're talking about everywhere from again basically Western Mumbai to North Mumbai, Mahim, Dadar, Prabhadevi, Parel. They have actually considered a lot of projects for the corporates also. Today, actually, we are going to understand from them what brings them to the listed market from the perspective of fundraising and also now actually what the being listed is going to imply to them. And also, we'll try and understand what are their actually ambitions as we go ahead. Let me now welcome the management, Mr. Rajan Thomas, the CMD of the company, and Mr. Rahul Rajan Jesu Thomas, the director of the company. Gentlemen, welcome to the show.
Thank you for having us
Thank
with
you for
you at
having us.
your show. It's a pleasure to be here.
Rajanji, let's start first with you. Help us understand. Real estate is not an overnight business. It really takes many years to build a brand, to build a trust, and then also set up the entire supply chain from the perspective of materials, construction, teams, delivery on time. It's a very complicated business. Help us understand your legacy, your journey till now.
Yeah, we started this company, Suraj Estate Developers, back in 1986. We bought the first property in Mine West. It was a redevelopment project. We had something like 50 tenants sitting there, and it took us a little while to gain the confidence of tenants that they will, and assurance to them that we will rehouse them and successfully complete the project. So we did that, and after that, we have got a number of similar offers from other landlords, from whom we have purchased lands, and in some cases also did joint development. And over a journey of last 36 years, we have done 42 sites. And while redeveloping these kind of sites, we have rehoused 1,100 tenants in Mumbai city. So that's a very important milestone for us.
Right. Let's also talk about what kind of projects actually have you been building, like which segment you're operating in. I would believe you operate both in the residential and the corporate segment. So let's first pick up the residential segment. Which kind of income brackets or which kind of segments actually you build the projects?
Yeah. So over a journey, we have done primarily larger emphasis were on residential projects, and in within the residential space, we have done mostly one bedroom, two bedroom, and also the three bedroom. But for most part, it was one bedroom and two bedroom because that gets very good traction in terms of sales and acceptance in the market.
Volumes are good and
Volumes are good.
turnaround is fast.
Velocity is also very nice in that kind of segment.
Right. Fair to believe that that would be a bracket, um, maybe I think till 50-60 lakhs.
No, so the ticket size starts from 1.2 CR all the way to 3 crores. So that's a value luxury segment of 1 and 2 BHK compact homes.
Of course,
With
because
with
it's Mumbai.
yes, it's
Pardon me, I
South.
just forgot to talk about Mumbai.
So and then we have another segment of luxury which caters to the obviously the higher audience, which is 3 BHKs and 4 BHKs, and then the third segment is commercial. So these are the three segments we're operating in.
Okay, and from the perspective of commercial projects, like who are your actually top clients for whom actually you have been building up?
In the past, we have done commercial offices, corporate offices for banks and very well established, companies. Two of them are notably Saraswat Bank and Clearing Corporation of India Limited. But going
Okay,
forward, we are also coming up with a proposed new site of about a lakh of square feet, which is approved, and we'll be expecting to launch in the before March end of 24.
right. And right now, currently, like how many projects are under construction?
As we speak today, we have 13 sites under construction at various stages of construction. Some are in more advanced stage, some are at the plinth stage, some at the middle level.
And that perhaps in the future will lead to how much of carpet area in terms of
So
sale square
currently,
feet?
So currently we're doing 6.6 million square feet of carpet area among these 13 projects. We have an upcoming portfolio of 16 projects, which has a carpet area of approximately 0.75 million. So in total, that's what we're doing. We're doing about 13.5 million right now in the ongoing and the upcoming portfolio.
When you say upcoming portfolio, those are like where you've acquired the land, you want to raise funds, or their construction has already started there?
No, upcoming sites are where construction is not started, but various
Okay,
approvals have been obtained,
fair
and
enough.
some like
Fair enough.
they're ready to go in for the most part. But after we have a bandwidth of execution also. So while we execute, at the moment we can go up to 15 sites at a given time. So as we complete 3-4 sites, we pick up 3-4 sites from this kitty of upcoming portfolio.
And all these sites are in Mumbai?
Yes, all sites are in island city of Mumbai and Bandra, as we speak.
Okay. And these are largely towards the western Mumbai, like all in the region of Borivali, Bandra, Andheri, South
Uh,
Mumbai, or you also operate in Navi Mumbai and Thane also?
so till now, we have our area of operation has been up to Bandra only. But going forward,
Okay.
we would not be shy to go at other areas of Greater Mumbai. Wherever the opportunities are there, we are definitely willing to take a look and explore the possibilities over there.
Sure, sure. And also, like, what's the sort of average price per square feet? I understand different projects would have different selling price, but what will be the average blended price in terms of selling price per square feet?
So in the ongoing portfolio, I can give you a range. So we are doing the value luxury and the luxury. So ongoing portfolio would be in the range of 40 all the way up to 70,000. That would be per square foot of carpet area, and that would be the broad range for the value and luxury projects.
Right. So 40,000 rupees actually is 40 to 70,000. So
40,000 is
that
the
basically
average rate in the area of between Dadar and Prabhadevi, and Bandra is a little
then.
bit more.
Yeah.
Right. So that actually gives us sort of a very strong sort of a project size. Help us also understand how much funds actually are looking to raise from this IPO. What's the split again? Basically, if there is any between sort of usage of funds, and I would understand that primarily actually you're using these funds to pay off the borrowings and then also acquire land. So help us understand that also.
Yeah.
So it is going to be entirely a fresh issuance of shares. So everything which you are
Mhm.
raising is going into the business. There's no OFS component in this issue. Out of the 400 crores, 285 crores would be for the debt prepayment. So this
Because
is, and 35 crores would be for the land and land acquisition rights. And the balance would be a GCP portion also for covering the issue expenses.
so when we say
Right.
repaying debt is a high cost debt in our portfolio, there are certain high cost debts which we will be first repaying, and also partly transferring the high cost debt into low cost debt of the remaining portion after payment.
Right. And from the perspective of debt, how much debt is right now on the balance sheet?
Uh,
So
Debt
the total overall debt was 550. So we plan to repay 285. So debt to equity ratio post the issue would be in the range of zero point 0.5 to zero point 0.6.
Right. So basically, entire 285 crores debt is going to be repaid.
Yes.
Yes, that will be repaired
Okay.
285, and also the remaining portion will be also renegotiated and brought into a low interest regime by
Yeah, it's
replacing
going to
the
be.
present lenders with
You're
low
going to
cost
become.
lenders.
Yes, you're going to become a listed company. And right now, so what's the average cost of borrowings for your 550 crores of debt?
So average cost of borrowing because we are going to NBFC is about 16.5%. So
Oh
idea
wow.
of this
Okay.
is to free a lot of our interest expenditure and add to the bottom line once we repay the debt. And like Dad said, renegotiate with the existing lenders and get that down. So idea is to increase the bottom line.
Absolutely, because from 16% again, basically, if you and that actually implies your average annual cost is around 80 crores. Even if I just do a simple calculation here, and if you pay off half, you actually are simply saving 40 crores of interest cost. And actually, if you reduce the interest cost by another sort of from 16% to 11-12% at least, that's a saving of
Yeah,
400 basis points. And
yes,
yeah, that's basically is again going to save some good amount of money. It's
yes,
it's definitely going to show up in the EBIT and then also profit before tax. So that's something
absolutely,
very
sir.
interesting.
Absolutely,
That's the idea, sir.
absolutely. What you said is absolutely right. This is our first. This would be
Yeah.
our effort to do this in the first phase, and very immediately it's a low hanging fruit which we can pick up, and also increase the footprint of our execution in terms of the area of projects. Going forward, we will increase the size of projects. May not be the number of projects, but larger projects which we take, which will also will add up to our bottom lines.
Right, sir. And apart from this, sir, what are the actually the sort of any other plans? Like Mumbai is a core market. Any plans of a sort of moving away from sort of Mumbai? And second, I also want to ask you, apart from residential or corporate, which sometimes you do, any other plans of sort of moving into any other types of projects?
Since we are well entrenched in this market, we would like to concentrate on Greater Mumbai only. We have got enough on the plate in Greater Mumbai, and the returns are very good in Greater Mumbai compared to other cities. But we like to have a product mix of 60-65% of value luxury, that is compact flats, 25% of luxury apartments, 3 and 4 bedroom, and 10 to 15% of
Commercial.
commercial projects. Commercial also has been now looking good, and a lot of demand is there in the market.
Makes sense. Makes sense. Makes complete sense. And I think viewers and investors both will be happy actually towards your strategy because it always pays off when you actually work in on your strength. From there, sir, what's your own sense in terms of margins? How's the sort of margins actually have what has led to your margin performance over the last 2-3 years post COVID? How has been the operating environment to you? How actually you control your sort of cost structure?
So in terms of a margins under 33.7, it's in the range of 40 to 45%. That's what we look at in terms of our 33.7 margins. This is also, we also have land already bought at historical cost, which is also adding to our margins for the next at least 4 to 5 years. The projects which we have, the upcoming projects will be delivered. So I think our margins will be, at least for the next 4 to 5 years, we'll see a higher margins. But as a normal 33.7 redevelopment, we look at margins approximately ranging from 40 to 45%.
Right. And I'm coming back to numbers here because earlier we were talking about almost a 6 million plus sort of sites, 6 million plus square feet in your sites where actually they are under various stages of construction, and then another 6 million where you're going to construct. So even in these 6 million plus square feet carpet area, it is actually telling me that we are roughly talking about 24,000 crores of potential revenue
Oh,
over a
sir,
particular
like
period of
0.6 million, sir.
So I like to correct that. It is 0.6
time.
million, which 0.6 million.
Okay, 0.6 million. So right
About
now,
6
under
lakh
various
square feet.
stages of
6 lakh square feet.
We can put
6
it
lakh
in
square feet.
perspective. 6 lakh square feet. Construction with common areas, etc., will be much higher. Could be something like 2 million, but saleable component will constitute about 6 lakh square feet.
Okay, now the numbers actually are clear. So we are talking about roughly 2,400 crores or more against our potential revenue.
Yeah.
As per the construction schedule, roughly the accrued revenue is going to come over how much period, sir? 2 years, 3 years,
So,
up
so
to 4 years?
ongoing 13 sites. I think it would be reflecting in the next two years. That's what we envisage. In terms of our upcoming portfolio, of course, as through this fundraise, we want to hasten our upcoming projects. So I think around 4 to 5 years is reasonably good to assume we would complete the upcoming portfolio.
5 years would
Right,
be a good
and
time.
sure. And the sort of the projects where actually there are various stages of approval on the land, and obviously you're going to actually sort of use the money to start building on it. I'm just revisiting the number here. How much that is also 6 lakh square feet? where you
No,
not
that's
started
7.5.
construction?
So upcoming is 7.5 and ongoing is 6 lakhs.
Okay. So if I combine both and we actually envisage almost 5-6 years, then we're talking about potentially 5,000 crores of revenue. So that roughly actually our viewers can actually sort of calculate themselves. But okay, that gives us sort of a good visibility on the construction pace here.
Yeah.
Having said that, perhaps last few questions. How has been the raw material inflation for you? Like of late, 2 years back, we saw some surge in the cost. Now things are slightly moderating. So how it has been for you? Were you able to pass through the cost? It was all built into it. How it works for you?
Yeah. So the steel and concrete prices have gone up, as you rightly said, over the last years, which has added up to the construction cost. But since we are operating a little high profit margin in the city, we are able to absorb that without much pain. And that is absorbed from our profit margin, and we are not passing it on to the customers. Customers are going to pay the same amount. We are absorbing that cost, but it translates to a very small. I mean, compared to relative to the price, it is not so substantial.
Okay, sir. Sounds good. Perhaps I think it's a good time to get listed in the market. I think from our side, from our viewers, we'd like to extend all the best wishes to you
Thank
for a
you
very
so much.
successful IPO. And we hope to stay connected at the start of the new calendar year, around the results time. I can talk to you at that time.
Thanks
Thank you
for
so
giving us the
much.
opportunity to air about our company on your channel. Thanks for having us.
Thanks.
And dear viewers, I hope you liked the show and learned about Suraj Estates. For now, it's a wrap on this conversation.
Thank you.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.